So you need a chart of accounts. You don't know what a chart of accounts is. How does it work? How do you set it up? What if everything messes up? Don't worry. Take a breath. I'm going to break it down for you. I'm going to take you through step by step, and even if you've created one before but never for property management or rentals, I'll offer specific tips and examples, including a sample chart of accounts for a property management company. Or you can go ahead and click the link in the description and download our free chart of accounts template, but I'd still recommend watching this whole video to understand how to use it and give you more ideas. With that being said, let's start from the beginning. What exactly is a chart of accounts and why is having one so important? A chart of accounts is a list of all the different financial accounts that your business uses. This list is all-inclusive, meaning it includes every type of financial account, like tracking expenses, revenue, transactions of every kind, credits, and anything else business-related. The best way to think of this is chart of accounts is like a digital filing cabinet. Imagine every financial action your business takes as a document, and each of those documents fits neatly into a particular folder. Your chart of accounts isn't just important for filing away financial information though, it's also a database you'll pull from to craft important reports like balance sheets, which helps you assess your business health, forecast its future performance, and provide information to your banker and accountant. Your chart of accounts serves as part of a foundation of a sound business structure. So it's worth investing the time in crafting one which does the job how you need it to. So then how does it work? It can be complex, but when you break it down into steps, a chart of account for property management is pretty straightforward. A chart of accounts is going to be organized into 5 major types of financial information. You have your assets. This includes things like properties, most notably, and financial accounts. You have your liabilities, which is primary debt such as your mortgages on those properties. You have your equity, which is the money that you've invested in the business, and your revenue, the money the business brings in from things such as rent, parking, other tenant fees, etc. And your expenses, the money your business spends to manage itself, such as like repair costs. From there, you then break those primary accounts into sub-accounts, and we'll go over some specific examples in the next section. Once you have all that in place, every transaction that passes in or out of business is recorded on that chart of accounts, be it property sale, rent payment, or service costs. That not only makes everything way more transparent for you and your clients, but easier for you to manage financial activity in virtually every way. So how do you set up a property management chart of accounts? While there is no standard structure for a chart of accounts, including one for managing property, there are, however, suggested structures that you can use as kind of a template. If you're managing a rental property, a good place to start for a suggested chart of accounts is an IRS Schedule E, and that's Form 1040. Since you're likely to be filing that anyway, you'll be familiar enough with it to understand how your current accounts break down into these major categories. Once again, our template is linked below, and it does use that form as a basis to make it as easy as possible to craft your chart of accounts. It isn't just a rental property chart of accounts though, you can use it for any kind of property management. You may be wondering about QuickBooks, so keep in mind that QuickBooks does have a generic chart of accounts template that you can use. However, because they're not designed specifically for property management, they typically need more modifications than the work you'd need to just make your own property management specific template, so it's not generally advisable to use one of QuickBooks templates. So I'm going to take you through a step-by-step of crafting your own chart of accounts designed for property management. Let's start with step 1, establishing your number system. The first step in setting up your chart of accounts is deciding on your number system. Typically that's done with something called block numbering. That simply refers to the practice of blocking or reserving large sequences of numbers for future use in the accounting. The basic idea is that as your business grows, its number of account tends to grow with them. Right now you might only have 20 asset related accounts, but over time you'll have 30 and then 40, etc. So if the numbers you select is, let's say, 1 through 20 as your asset accounts, 21 through 40 as your liability accounts, 41 through 60 is equity, so on and so forth. Well, 1 through 20 was your assets, but then you hit 21, it's liability. So what do you do with your 21st asset? It would have to become an account number 101, which becomes really confusing. Instead, I suggest doing it like this, using blocks of 1,000. That way you have more than enough space for new accounts. Doing it this way doesn't just keep your chart of accounts from being a jumbled mess, it also helps identifying accounts easier. With number blocking, you and your CPA can easily identify what type of account it is by its first digit. If it starts with a 2, you know it's liability. If it's a 4, you know it's a revenue. So now moving on to step 2, which is set up your level 2 accounts. It's time to drop in all your level 2 accounts. What kind of information fits into each of these 5 overarching categories? Here's just a quick breakdown. So first is revenue accounts. If you manage your own rental properties, this typically comes down to one main account: rent payments. However, it also includes any other source of revenue such as utility payments, security deposits, parking fees, pet rent, anything like that. Second is your expense account. Your expense accounts are relatively easy to set up, as they'll most likely be similar or identical to the 15 expense accounts listed on that 1040 form. That includes things such as advertising, auto and travel, cleaning and maintenance, commissions, insurance, legal and other professional fees, management fees, mortgage interest paid to banks, and so many other interests in repairs and supplies and taxes and utilities. The list literally goes on. You can also include on an other expenses category for anything that doesn't fit anywhere else. However, that can get a little tricky when it comes to tax time because they'll need to be identified somehow for both your accountant and the IRS. Third is your assets account. Most notably, you'll include a line for each business bank account here. Your mortgage escrow accounts, land, buildings, and improvements are typically included as well. Accumulative depreciation is another common account, and it's designed to track the depreciation of your assets over time. Specifically, the original value of those assets, the accumulated depreciation, and the net asset value via the balance sheet. Fourth, we have our equity accounts. Equity accounts essentially include two things: your contributions and your distributions, or in other words, what you put into the business and what you take out. Expenses paid with cash are also included here as they count as an owner contribution. Fifth is our liability accounts. These liability accounts include several types of accounts such as mortgages, loans, lines of credit, credit cards, security deposit. So now we're on to our last step of setting up your chart of accounts, which is simply just put it all together. Now you've got the basics, and it's time to put it all together to see what a chart of accounts looks like. We've taken our 5 major categories and added many sub-accounts based on what we talked about in step 1. The result is a fairly fleshed out chart of account example template for property management. It's complex yet easy to read, and a chart where each account fits. Keep in mind that you could use this as a basis for any of your real estate business, including as a rental property chart of accounts template. And I know there's some questions you've probably been asking during this video, so I'm going to answer. How do you track multiple properties in your chart of accounts? So to track multiple properties in your chart of accounts, you'd organize things like this with another layer of sub-accounts. So we know that anything starting with 1, anything in the thousands, is an asset. We know anything in the 1400s or starting with 14 is a property. Now we've also identified individual properties with their own third-degree identifier. So the properties in this example are given the numbers 1401, 1402, 1403, 1404. And with that, you have the 101 on crafting a property management chart of accounts. One last quick note. How you craft your chart of accounts is going to vary somewhat depending on if you're the owner or investor, you're the landlord, or the property manager. For example, if you're the property manager, then the rent payments you receive should be listed under liabilities, just as the same way you'd list security deposits and liabilities. You'd also want a separate revenue account for payments to you for your services. Keep those subtle perspective details in mind when crafting your personal chart of accounts. Once again, you can download our free property management chart of accounts template, and it's in Excel format in the link in the description. So you can take that and apply everything that you learned in this video, or see if you forgot anything in your current setup. I know it can be a bit overwhelming, so if this helped, then make sure to give this video a big thumbs up and subscribe for more tips on all things property management.